My name is Dick Fredericks. I'm a founding partner of Maine Management and a managing director here. I have the pleasure today to be with Bob Hiller, who's one of our advisory board members. And importantly, he was a member and governor of the Federal Reserve Board. He was governor between August 1986 and July of 1989. He served under two giants, both Volcker and Greenspan, and was with Volcker for maybe 1 year and Greenspan for 2 years. So let's kick it off, Bob. And first, can you share some of your own experience as a Fed governor with some emphasis on what influence the chair had when you were there? And you also were there when there was a changeover from Volcker to Greenspan, and what was involved in that?
Well, good to be with you, Dick, and pleasure to be with Maine Management here. It was a very interesting time when I was at the Federal Reserve. Volcker was the chairman, like you said, Dick, and he ran the Federal Reserve with an iron fist. One time I remember I got to the Federal Reserve Board and I was going to give a speech that I had already agreed to give long before I joined the Federal Reserve Board. And he said to me, cancel it. I said, well, can't cancel the speech. A couple of hundred people already signed up for it, waiting to see it. And he says, well, don't say anything. I said, you mean you don't say anything? I started to laugh. Looks at me very seriously, puffs on his cigar, and he says, obfuscate. And that's the way he approached monetary policy. Only he was the spokesperson for the Federal Reserve, and we had to be quiet.
You know, it's interesting, Bob. You and I have talked a lot over the years, and I know one thing is true, that you were there when there was only one mandate. That was stability of prices, not the dual mandate now with stability of prices and the unemployment rate. Can you tell me, and I think I know your answer, whether the single mandate really accomplished both, even maybe more effectively than having a dual mandate now?
Actually, formally, we had a dual mandate when I was there. But Volcker seriously ignored the employment mandate, if you want to say so. The emphasis was really on price stability, and he was brought in by President Carter to bring about price stability because inflation had really gotten out of control under Volcker's predecessors, Miller and Arthur Burns especially. Inflation was close to 20%, and Volcker got it back down to manageable levels.
Is it true that President Reagan recognized that and basically said, go for it to bring down inflation?
Exactly. And he was a fan of Volcker's, and so he gave him a free hand there.
Now, that was important to have that presidential
Absolutely.
backing. Yeah. Let's talk about Kevin Warsh. I'll start out by just giving a quick summary of some of his background. He's got an impressive resume. He grew up in upstate New York by Albany, and then he went to Stanford undergrad, and then he got a law degree from Harvard, and he even had some classes at MIT. Importantly, when he was there, he sort of met all the greats. He worked with Milton Friedman. He worked with John Taylor. He worked later with Bernanke. But who is Kevin Warsh? Do you know about him and his background, and do you believe that Trump picked the right guy?
I think so. He's a very conservative economist, solid background. He believes in the value of money. He believes in price stability. So those are important values that, if I may say so, he and I share.
Well, Warsh has come out with several quotes on the Fed. He said that the Fed has gone through some institutional drift. He said that they have failed to satisfy the statutory remit. He said that they have contributed to the explosion in federal spending. He's been critical of the time to get the Fed back on track, and he feels that there's an outsized role for their underperformance under the current leadership. Those are very specific and very critical. Do you think that's going to have a problem? Will create a problem once he gets confirmed? And we'll go into his confirmation in a second. But will that generate difficulty with the staff and those who he has to lead?
Well, I agree with his criticism that the Federal Reserve has gotten too broad in his remit. And that is really one of the problems with Federal Reserve independence. It is independence in monetary policy that the Federal Reserve really has, and not independence to pursue DEI policies or all these very broad things that are not part of the narrowly defined mission of the Federal Reserve. Once he gets there, I think he obviously has to get along with the staff, and the staff is enormous. Just between us all here, I think the staff could stand a small tightening as well as far as size is concerned. There are way too many economists there. And as you know, two economists never agree on anything. So having less economists may actually help in the process. But he's a very congenial man, too. And so I think he will get along well with the staff.
Yeah, from my standpoint in reading, one of the things that you just touched on was he does not like mission creep, all the things that weren't part of the real mandate. And he believes that the balance sheet is too big, and he thinks that the Fed is handing too much credit allocation, and he does not like guidance. And it is interesting. Volcker had 8 years of central banking chairmanship without any guidance, and Greenspan had, I think, 17 years of no guidance. I'm wondering whether he's going to go in that direction and eliminate, the dot plots and the guidance. What would you think that the odds of that would be?
Well, you're absolutely right, Dick. Volcker was always in favor of keeping your mouth shut. Greenspan changed that slightly. He thought you should mumble incoherently, I think were his words. And if you understood what he was actually saying, then he had made a mistake. He had to mumble more than he actually did. So both of them are not in favor of forward guidance. And if you have a very large board of directors, essentially, the entire board of governors and the additional presidents of the Federal Reserve, and all of them are running around and giving forward guidance, they will result inevitably in confusion. So doing less of that, I think, would be not a mistake.
One of the things I've seen on Kevin Warsh was he'd like to have the notion of a rate increase or a rate decrease on about page 15 of the paper. In other words, very quiet to underscore your terms about being quiet about things. He wants to get the Fed off the front page, which he's complained about. It's too much in the dialogue of the day. And again, that gets him back to the basics, which is where he wants to go. Let's talk for a second about his confirmation. He's not Fed chair yet. He has to be confirmed. There is a senator, Senator Tillis, who has said that until the suit against Powell is resolved, he's not going to vote for any chairman, no matter who it is. Although he said he likes Kevin Warsh. Do you think that there's going to be any controversy around his confirmation? And what do you think about the Tillis situation?
I don't like the Tillis statement. I don't think he should have extraneous things impinge on the confirmation of Warsh. his confirmation should really be done on its own merits, and he should rise and fall on its own merits. By the way, my confirmation was unanimously done by the U.S. Senate. So I think even somebody like me can get a unanimous vote out of the Senate, and I would sure hope that he would get a unanimous vote himself.
You may have been the last unanimous vote.
May have been.
And again, you went in 1986.
Half a century ago.
Yeah.
Almost 40 years.
Do you remember what Powell's vote was when he was reconfirmed by Trump?
I have no idea.
But it wasn't,
It was not unanimous.
Unanimous.
No.
Okay. I didn't think it would be. Do you think that the confirmation will be a period when people really talk a lot about the independence of the Fed?
Absolutely. It has been put up front and center. And I think, the president should really stay out of the confirmation process. He has made his suggestion. He has put his candidate forth, and now he should let Congress do his job. And so let them weigh in on the merits of Mr. Warsh himself.
I have a theory on the independence of the Fed, which I think you may find interesting, you may not. It seems to me there's a lot more dissents that have been bubbling up. And it is interesting when you look at other central banks, England being one case, or even the Supreme Court, 5-4 votes, people say what they think. It's gotten to the point where it was, a vote of 12-0 or 11-1. You think that my belief is you're going to see more dissents, which really underscores the independence of the Fed. Would you agree with that? Or
I agree with you. The individuals should be independent. They should vote their best judgment, their own conscience. And so having dissents is not a bad thing. Speaking with one voice obviously gives it more gravitas, more emphasis. It means there's no question about that the current stance or policy is the correct one in the minds of these 19 very different people, if you count all the president.
I think I saw in the Bank of England's case, there recently was a 4-4-1 vote, and the head of the English central bank was on the side that voted the opposite way it went. So it was quite interesting there. The other thing that strikes me is that the regional Fed members should represent people in the region. And there's been some, kind of carpetbaggers, that might move to an area that aren't from there. But do the regional Fed members vote the conscience in the economics of their region, or what?
I don't think so. I think they should be voting what's good for the country as a whole, because there's only one national policy. You talked about the regional presidents. It's also true that the various governors, the 7 governors, have to be from different Federal Reserve districts. All of them are diverse in that sense. And nobody would argue that a person, let's say, appointed from the San Francisco district, like I was, should represent San Francisco. No, you represent the country, and that's it.
I'm glad to hear that. That's where, to me, it should be unanimous. One of the things that struck me that Kevin Warsh said was, inflation is a choice. You believe that? In other words, he said they could dial it in if they really want to get there.
Well, in a way, he is true. There's a choice with consequences. If you bring inflation down very rapidly, you probably pay for it in lower growth. You pay for it in higher unemployment, things of that sort. So you want to do it gingerly. You want to wait for the right moment, and you don't want to have excesses in your policy.
Hawk or dove? Where do you think he stands?
I think he is for stable money, and people would call that a hawkish attitude. So I would put him with the big birds, hawks.
I'm glad to hear that. I believe that, however, that people just fall back on that just too quickly. I think he showed in his past the willingness to be dovish when it was time, but more of the time he's been hawkish. But I don't think he is resolute one way or the other. I think he's for the right things. Again, to use your words, for the country. Um,
Yeah, but for the right thing, meaning price stability. And at the moment, we have close to 3% inflation in the country. That's not exactly price stability.
this might be part political and part economic. One of the real strengths of Greenspan, with whom you worked, was his notion about the internet and how it would be productive. And while some people thought he should be raising rates, he fought it because he knew the productivity that was coming. It seems to me that Warsh wants to lower rates because he sees a very large productivity gain coming, and it's AI related and other reasons, and the big beautiful bill, etc. I think that's the way that he probably convinced Trump that he could lower rates because he sees that same productivity that Greenspan saw years ago.
Well, productivity increases themselves will contribute to growth, obviously, make more supply available, and thereby lower the inflation rate too. As you increase supply, prices will tend to fall. I think you're absolutely right, Dick. If you have more AI, you have greater productivity, and that will increase the growth rate, therefore help to reduce it.
And I would summarize that he's not afraid of growth. He does not like the Phillips curve, which says, "Oh, if you have too much growth, you gotta raise rates immediately." And productivity is the key to that. And I'm very much in favor of the fact that he understands that growth can come without bumping inflation if you do it the right way. And he actually calls it a potential view of a golden era, which Trump's words, I think. But if you have a very strong economy, I mean, right now, the economy is kind of growing 5% nominal, and plug in your inflation. Interest rates aren't getting in the way of a good economy for the moment. If the economy is as strong as he thinks, will he be able to lower rates?
Good question. There will be also demand pressure on rates, obviously, as the AI system gets built out, more construction occurs. All that will require more credit, more demand in the credit markets. That will be an upward pressure on rates. But the Fed can lean against that a bit and make more liquidity available. And so I think it will be a fine balancing act. But overall, also, if the world sees that you are determined to get price stability, I think we can talk about what price stability really means. We can talk about that a little bit more. But price stability in itself will get rates down more than anything.
I hope that's right, and I believe it's right, and I look forward to that. Um, can a Fed chair be close to the White House and yet resist pressure when it's applied?
Oh, good question. Yeah, obviously, it can be friends. There should be frank and open discussions. That means it should also mean there's not a dictatorship, but there's nothing wrong with discussing policy. As you know, Secretary of Treasury regularly shows up at the Federal Reserve or vice versa, and they discuss policy. They discuss the needs of the Treasury for financing, what it implies for Federal Reserve policy and open market operations. So the two sides clearly have to understand what is happening on the other side of the ledger.
I'm going to ask you a technical question, and I wish I knew the answer. He wants to reduce the balance sheet. You can do that by either letting the bonds roll off or by selling them. That is usually that can be a tightening element. Can you do that and lower rates at the same time? Is it sort of like net neutral? You do that?
Well, when we talk about lowering rates, that typically refers to the Fed funds rate. So, yes, the Federal Reserve has control of the Fed funds rate pretty well. They have a lot less control over the long-term aspects, and that's where letting the bond market, letting the bond portfolio run off or actually sell. At the moment, we got a portfolio of over $6 trillion. It will take quite a few years for it to run off by nature because the bonds are expiring. So I think you should sell some of the bonds too. And if you have a strong economy, you have a strong demand for the bonds, that shouldn't be any problem.
One of the things that COVID showed us loud and clear is some of the numbers we have are not very well generated. For instance, the Bureau of Labor Statistics on labor does reviews 3 times a month. So the same thing with inflation. Yet there's things out there like there's something called Trueflation that looks at 35 billion pieces of information. I think it's almost daily. I believe, but that Warsh will be open to those kinds of things as opposed to what looks like tired, government generated statistics. I don't know if you have seen anything for that for Warsh or not, or believe it.
I don't know what exact numbers Warsh looks at, but yes, obviously, you want to look at the entire spectrum of the data available. And if there are data in the private sector that give you more information, then you want to look at these data. Greenspan, for instance, famously looked at freight car loadings and paperboard production because he figured everything has to be put into a box, has to be shipped someplace. So that was a good leading indicator number that he had. When I was at Visa, I thought that the Visa numbers would show you a lot about consumer spending, that they may be helpful. But
Yeah, I'm of the belief there's a tremendous amount of information in the private sector that they could tap into. I mean, they have 600 economists. I'm not sure what they're looking at, but they should be tapping into all the information possible.
absolutely. And I think one number that I would really like to see a lot more of is what is M2 really? What is the money supply, the amount of cash money that people have available for spending? It's not only the money that's sitting actually in commercial banks, but also in the non-banking sector. And you want to look at these broader definitions of money. And I haven't seen any emphasis on that at all. As a matter of fact, the Federal Reserve hasn't looked at the money supply for the last 4 or 5 years that I looked at all the data, all the statements of the FOMC. The word money is not to be found in there. And that is almost criminal negligence.
I was going to say the exact same thing. Literally, they do not use the term money. And I don't know how you can run that railroad without, watching money and money supply.
How can you make monetary policy without looking at money? Good question.
Yeah. Yeah. By the way, one of the 2 great investors in the world of all time was Stan Druckenmiller. The other was Julian Robertson at Tiger, but Stan Druckenmiller, I think, may have had an entire career without a down year. Both Dissent worked for him, and as did Kevin Warsh. So Stan Druckenmiller said that Warsh really knows the ins and outs of crypto, and also that he pays attention to small details. You mentioned Greenspan with the rail car loadings and the cardboard box totals, etc. Apparently, Warsh is the same kind of wonk as that, and I'm encouraged by that, and I'm also encouraged by the fact that Stan Druckenmiller is so high on him and so positive on him. Um, we mentioned at the outset that there's a suit against Powell by Trump, and I guess if that's dropped, then the confirmation, that will go away. But if it's not, do you think that Powell will stick around because that suit will still be, an issue?
I have no idea what whether Powell will stay around or not. That's totally up to him. It's in his pocket. I think you should drop the suits and clean out the current membership of the Federal Reserve Board, and maybe the two things can go hand in hand.
It is interesting that the only, and I could be wrong in this, but I believe the only former head of the Fed that stuck around was Mariner Eccles way back when, and remember the building is named after him. It tells you how far it goes back. And apparently he was a thorn in the side of Truman, as he stayed on. I believe that Powell should go. It's like a CEO. After your CEO, you name the new CEO. You shouldn't stay on the board. You should leave. And I hope that's the case.
I agree. Volcker and Greenspan, they all did the same.
Yeah, it's the same way with Janet Yellen, and same way with most of them. How do you think Warsh will be received around the globe?
Oh, very well. But at the moment, the United States, there's a lot of skepticism about policy and sometimes policy in the United States being very short-term oriented, a little erratic. I think President Trump has done a lot of great things for the United States. If there were more predictability, more stability, I should say, in the policy making, that would also be received very well around the world.
We also started out by saying in Warsh's background that he worked with the likes of John Taylor, Friedman, Schultz, Bernanke, etc. And you've been part of the Volcker Fed, and you've been part of the Greenspan Fed. Will there be something we call later the Warsh Fed? In other words, will he have a strong enough personality that people really relate to him as the head of the Fed and because of the job he's done?
Excellent. I hope so. I hope so. You have to earn that by convincing the markets, convincing the world essentially that you are a stable influence, a positive influence. You kept inflation close to zero, not 2%, and thereby provided stability for the financial and the entire economics.
So that certainly would define him. And do you think he has got his own economic view that's driven by these fellows like that I just mentioned? All the greats. Do you think that he will differ much from some of those, or do you think he will have his own stamp on it?
I think they have a strong influence on him, forming his opinion. In the end, I think it is his decision, and he is a pretty diplomatic guy. And so I have confidence that he will get his views across. I think we've covered it pretty well. We talked about forward guidance. We talked about a narrow mandate. We talked about a narrower balance sheet. And most important of all, we talked about getting inflation down as close to zero as possible.
And we also talked about his messaging, whether he will get rid of guidance and the dot plots and all the speeches. I think he's going to lean that way. Do you think that there'll be members of the Fed who will leave when he goes in, thereby creating spaces for others to come in?
No, I don't think there are people who are leaving just because he's coming on board. These are consensus builder. He's a very congenial man. And so I don't see anybody who says, well, I'm not going to sit on the same bench together with him. I think he will do very well there.
The one other thing that we didn't bring up, which I think is a real strong point, is that he was there during the 08-09 crisis. He had been at Morgan Stanley in the mergers and acquisition area, and he worked very closely with Bernanke on some of the mergers that came out of that. When, some of them were shotgun mergers, obviously, but he has gone through the fires of a very steep decline, and I think that is something that I like to see in terms of somebody coming into the job.
Well, it's certainly breathtaking. I remember when I got there, 2 months later, we had the famous crash of 89 in October of, I'm sorry,
87.
86, 87. I'm
Yeah.
sorry. So that was also a defining moment as far as monetary policy in history.
And again, going back to whether it's the 87 decline or the 08-09 decline, I believe that Warsh's notion is you should be in the background until something like that surfaces, and then you should be able to use some of these tools as opposed to having them be on, be front and center all the time. And that gets into QA, QE1, QE2, QE3, QE4.
Right.
And I think that was the main thing that he left the Fed because he didn't want to have that during good times. He only wanted to bring those tools out during tough times.
Well said.
I think that ends our Q&A, and I want to thank Bob for being not only a great commentator, but somebody who's on our board, and we always have fun together. So this was fun for me, and hopefully it was for you as an audience as well. Thank
Great
you.
to talk to you, Dick.
Yep. Thank you.
Good to see you.
Yeah.